Okay, so here we've got the 2017 calculator, and we're just going to do the workings. We're going to start with working one. Yeah, so I just haven't pre-ruled out again because it just makes it easier and saves me a bit of time. So working one is going to be closing stock. So we can see there from the question, so we're just looking up here at the top, stock on the 31st of the 12th. Stock on the 31st of the 12th was 76,500 euros. This includes damaged stock, which cost 4,500 and has a net realizable value of 3,000 euros. So I'm going to take the 31st of the 12th figure, which is 76,500, which is nice and handy. And all I'm doing is taking away the 4,500, and I'm adding back on what it was and its net realizable value, which in this case is 3,000 euros. All right. So that's all I did there in that case, and that should give me a figure to the value of minus 1,500 euros, 75,000 euros. So how it looks in the trial balance: 76,500, 4,500 on the credit, and 3,000, adding it back at what it is worth at the minute. That figure goes to two places. It goes to the trading account in the current asset section of the balance sheet. All right, very straightforward, 75,000 euros, and nothing overly new there in that case as well. All right, second working is going to be my delivery vans. So again, provide for depreciation and delivery vans at a rate of 15% of cost. So just to clarify, when you hear me say TBs come from the trial balance, but in this question, I bought a new vehicle which cost 48 and I sold an old one which cost 40. All right. So the trial balance in this case coming from the trial balance itself, I'm just going to call it out, you can get it yourself. Trial balance figure is 140, sorry, it's 150, so 150,000 euros. I bought the new vehicle for 48, I don't know why it's in bracket there, and I sold the old vehicle which was 40. Trialed it into the calculator and I come out with a figure to the value of 158. Okay, and that's my new fixed asset. In a T account, how it would look would be, you'd have the 150, which is your asset on the debit side. I would add on the new asset, which is 48,000, and I would simply take away the old asset of 40, which I no longer have, and that gives me 158. That's my fixed asset that goes to the balance sheet, 158,000. Okay, the next item then is depreciation expense. So the first thing I'm going to do, because the transaction occurred during the year, I'm going to depreciate both these items separately. So I'm going to do the old one first, then I'm going to do the new one, and then I'm going to have what I call my existing vans, okay, which is what's left. So the old vehicle cost me 40,000, the new vehicle cost me 48,000. The rate of depreciation, which we found out from the question, in this case is 15%. Just keep an eye on that, it can change, it can be 20 depending on the depreciation policy. And I'm going to divide both these figures by 12, because if we think about it, on the date of the transaction, I sold the old vehicle on that date and I bought the new vehicle on the same date. So if I sold the old vehicle on the 31st of the 3rd, I only had it for 3 months. And if I bought the new vehicle on the same date, well, I had that for 9 months. All right, throw it into the calculator and I'll come out with the figures value 1,500 and 5,400. So 1500, 5400. What I've left to do then is just my existing, because if you think about it, I've already done the 48 and the 40, but included in this 150 is the old 40. So technically my existing delivery vans are 110. So 110,000 multiplied by 15%. Just clarify once more how I got the old. It's the trial balance minus the old vans, because that amount is incorporated into that, which means there's still delivery vans to the value of 110,000 euros that haven't been touched yet, and that gives me 16,500. Add both those together and I get 67,400. So all those three figures, 67,400. That will go on the debit side of my expense. Why? Because it is obviously an expense. What type of expense? It's a selling and distribution expense. All right, and it's for 67,400. And that brings us on to the accumulated depreciation. And again, similarly to the delivery van cost, I'm going to have a trial balance figure. Trial balance figure for accumulated depreciation is 65,000 euros. All right, if you're wondering how I got 65,000 euros, it was simply the 150 minus the 85. Okay, so cost minus net book value gives me the depreciation. That's my opening amount there, 65,000. That's 67,400. Simply gets added on to this year's depreciation, or to last year's depreciation, so 67,400. Okay, and that's, so once I've done my expense, that's what I do there. Now, if we think about it, included in the 65,000 is the depreciation on the old delivery van. So if I don't have the delivery van anymore, I can't account for the accumulated, which is the total depreciation. So I know I'm going to have to take something away, and what I'm going to do is I'm going to find the figure. All right, so that's, just to clarify, that's this year, that's my old depreciation. And how I'm going to do it is I'm going to take the value of the old vehicle, because that's the one I don't have anymore. So it's going to be 40,000 euros multiplied by the rate of depreciation, which in this case is 15%. I'm going to divide it by 12 and I'm going to multiply by the number of months that I've had the asset over its lifetime for. So just to clarify, if I've bought the asset on the 30th of the 9th 2012 and I sold on the 30th of the 3rd 2016, if you do the maths there quickly, that's simply 42 months, okay? So multiply by 42 and that will give me my final answer, which in this case is going to be 21,000 euros. So that's the total depreciation on that asset that I no longer have. So it's that 21,000 is included in the 65, so I simply take it away because I don't have it anymore. And that gives me accumulated depreciation to the value of, I'm gone wrong here now, sorry. This, if you add those three figures together, sorry, that should give me a value of 23,400, sorry, 23,400. So that 23,400 will go there, and that will change that to 23,400, okay? So I added those figures wrong. So that 23,400 goes down here, 23,400, because that's this year's depreciation rather than my accumulated depreciation, so 23,400. And I'm simply deducting my old one. So the only thing that I'm changing there was I simply added the three of those wrong together, just changed that to 23,400 and it goes to the same place as it has been before. So my total accumulated depreciation in this case is going to be 67,400. So that was the mistake that I made. Where does accumulated depreciation go? So just to clarify, in the T account, 21,000 gets taken away, minus fixed asset in the balance sheet, 67,400. And now we move on to the profit and loss and disposal. So just to clarify, the double entry is I sold it up here, which means I bring down the asset that I sold, 40,000 euros. Okay? Just to clarify, that is the cost. I'm going to take away the depreciation, which in this case we just found out to be 21,000 euros. So the double entry would be, that fella would be taken away. And that will give me the net book value. So the net book value in this case is 19,000 euros. So that just means what it is worth at the minute. So it cost me 40, the depreciation was 21. So the net book value in this case is 19,000 euros. If I go back to the question and we look to see what the allowance was, you can see the allowance, which is what I received for the old asset, is 18,000 euros. Okay, so that 18,000 euros, it was worth 19,000 and I received 18,000, which means if we think about it, the 21,000 will go on the credit side of that amount because that's my depreciation. My allowance will also go on the credit side, and that would leave me with a value of 1,000 euros. And again, this is why I do it this way. Net book value is what it's worth. I only received 18,000 euros, so that means there is a loss. If you like the T accounts, which side's bigger? The debit side's bigger, so it's an expense. And it's going to be selling and distribution expense. And it's going to be a loss on my delivery vans, 1,000 euros, because when depreciated, I did not make a profit. The last item I must do in this question is, if we have a look here, you can see that the check for the net amount of transaction was entered in the bank account but was incorrectly treated as a purchase of trading stock. So when I have my purchases figure coming from the trial balance, you can see that included in this purchases figure here, the 536,500, included in that is the net amount of the transaction. So that's the physical amount of money. Okay, so just to clarify, if the new vehicle cost me 48,000 and I received an allowance of 18,000 euros, well then I only physically paid 30,000. So included in that 536,500 is the 30,000 euros worth of the old vehicle. So when I go to do my working, I flick the page. I'm going to first of all bring down my trial balance figure for purchases. So my trial balance figure for purchases in this case is 536,500, 536,500. That's on the debit side, 536,500. And I'm deducting the 30,000 euros because that is the net amount of the transaction. And that will leave me at 506,500. Okay, it's a net amount. That's what I found the easiest way to do it. All right, that's my trading amount figure, trading account, P&LT, 506,500. All right, and that's that working basically done, and we're ready to move on to working 3, which in this case is the suspense. All right, so I'd appreciate if you do the question open in front of you. So the first thing I'm going to do is I'm going to open my 3 accounts. So the suspense figure arises as a result of the incorrect figure for mortgage interest. So the first mistake is mortgage interest. The second mistake is going to be wherever incorporates the suspense. So the second mistake is I'm looking down through the T account and I'm looking for which account incorporates the suspense, and it seems to be that one. So that was my second mistake. So first mistake is mortgage interest, second mistake is insurance, and then the last item that I need to check for is a VAT refund of 2,000 entered only in the bank account. Now this is very important because a VAT refund means that I'm getting the money back, okay? A VAT payment means I no longer owe the money. A VAT refund means I'm actually receiving the money. So you have to understand that normally in this case, VAT is going to be an asset in the trial balance, all right? And just to double check, just to confirm that statement, if I go to my trial balance and I look at my VAT, you can see it's on the debit side because it's an asset, which means if I'm receiving it, I'm simply reducing the asset because the money has gone into my bank account. So it's going into the bank account and that was entered fine. So the account that I need to open is VAT, 6,400 euros, okay? So go back to the question, and I'm just going to get the trial balance figures for all of these. So the mortgage interest figure, just to clarify, was for the first 3 months was 2,400 euros. The trial balance figure was 2,400 euros. That figure is wrong. It goes on the debit side. Okay, and I'm going to always make sure that I highlight the 3 months. 3 months, because that's what I'm going to be referring back to in a minute. So if that figure is wrong, I need to find the correct figure. Second mistake was insurance, because that's the one that incorporated the VAT brackets. Go to the trial balance figure, get the insurance, 17,700. That goes on the debit side because, again, it is an expense, all right? So the good thing about these is normally these two accounts are always expense columns. The VAT then we've established from the trial balance is an asset, and the asset is to the value of 6,400 euros, and it's on the debit side. So it's very important to note that when you're dealing with a VAT refund, it's normally going to be a debit entry for VAT. If you're dealing with a VAT payment, it's normally a credit entry for VAT because you're paying off your liability. Okay, so the first thing I need to do is I need to find the correct figure for mortgage interest. Now if I go back to the question here, you can specifically see that I've got mortgage, so the 6% mortgage. This is nice little handy working, okay, because it's just 180 multiplied by 6%. Just to clarify, so it's 180 multiplied by 6%, and that gives me 10,800 euros. I'm going to divide that by 12, and I'm simply going to multiply it by 3. Okay, and that should give me a figure to the value of 2,700 euros. So 2,700. So look up. It should be 2,4. So it was 2,4, but it should be 2,7. How do I go from 2,4 to 2,7? I simply add on 300 euros. How do I add on 300 euros in the T account? It simply goes on the debit side, 300 euros. Okay, that 300, all right, has to go on the credit side, 300 euros, and I'm going to reduce my insurance column by 300. Why? Because it's on the opposite side, all right? Increasing that by 300 euros, how do I know? Because it goes from 2,4 to 2,7. 300 euros goes on the debit side because it's increasing my expense, and it has to go on the opposite side of insurance. It goes on the opposite side of insurance rather than VAT because this is the account that incorporates the expense. This is why I always do this in this order, okay? First mistake, and we fixed it. The second mistake then, if I look back at the question, it said the VAT refund of 2,000 euros entered only in the VAT account. So entered only in the bank account, sorry. So just to show you what happened here was, imagine the two accounts for VAT and bank, okay? So you don't need to draw this out. It was entered in the bank account, but if I've received 2,000 euros for VAT, well then the 2,000 euros has gone into my bank account, okay? Which means if I've received it, I'm no longer owed it from this asset. So what I want to do is I want to reduce it by 2,000 euros for the simple fact that I've already received the money, so I'm no longer owed it. So 2,000 euros reduces my asset, and it simply goes on the opposite side of my insurance account, which means I add it 2,000 euros, okay? And that's basically, so just to clarify once more, I've received the money, I'm no longer owed it. Throw it into the calculator, should come out with a figure to the value of 4,400 for VAT. That's fine. That's my new current asset. So scroll over a small bit. That's my current asset over here, 4,400 euros. My insurance column then is going to be a total of 19,400. That's my new administration expense, AE, 19,400. My purchase is already in from the previous work, and there's nothing that gets affected here in relation to mortgage interest. The simple fact that this mortgage interest working doesn't affect my T accounts because it only relates to the first 3 months. Okay, and now we can have a look at the next working, which is going to be investments and investment income. So very common working in a sole trader, patents which incorporates 4 months investment income, which will be written off over 5 years starting in 2016. So just always check what year we're doing the accounts for, and we're doing it for 2016. Okay, so the first thing I'm going to do is I'm going to go to the trial balance, and I'm going to get my investments. So my investments are, the date is here, the 1st to the 5th. The reason it's the 1st to the 5th is because I purchased the investments on that date, which means I can only receive interest for that date. Okay, so the 5th basically means that I have it for 8 months. May, June, July, August, September, October, November, December, 8 months, okay? So 200,000 multiplied by 3%, divided by 12 multiplied by 8, that's the format. So 200,000 euros multiplied by 3%, divided by 12 multiplied by 8, all right? And it's 8 for the simple fact that I only bought the investment on the 1st of the, and that gives me 4,000 euros. That 4,000 is the figure that needs a double entry. So it's my gain for the year, 4,000 euros goes on the credit side, and it's my asset for the year, 4,000 euros goes on the debit side. The good thing about this is this gain will not change. That 4,000 can always go straight into the profit and loss account as 4,000 euros. All right, and the reason it can go in there because my gain won't change. What will change though is the value of this asset. Why? Because in the workings it specifically states that patents, which incorporates 4 months investment income. So 4 months of this figure is incorporated into my patents. So the first thing I need to do is I need to find 4 months of it. So if 4,000 refers to 8 months, I'm simply going to get 4,000. I'm going to divide it by 8 and I'm going to multiply it by 4. And the good thing about that is it's very straightforward. It should give me 2,000 euros. All right, that 2,000 is the figure that needs to come out of my current asset, and it needs to go down because it's incorporated into patents, which means it's being added on. So my trial balance figure for patents, just to show you, is coming from here, and it's 68,000. And they tell us here again that it's incorporated into as well. So patents incorporate 4 months investment income, 68,000 euros. Okay, so that's my starting figure here, 68,000, 68,000. So 2,000 is coming out of my current asset and simply getting added into patents, like so. And that leaves me with 70,000 euros. Because that 4,000 has a double entry, and because that 2,000 has a double entry, my investment income is sorted, and the value in this T account at the minute is 2,000 euros, and that's going to be my current asset, CA, because that's how much I'm owed from that investment. Now, again, in the workings, it specifically states that patents which incorporates 4 months investment income are to be written off over 5 years. So just to show you, the 5 years is highlighted there, starting in 2016, which means every year, starting this year, my patents are going to lose value. So I'm going to divide that by 5 because it's to be written off over 5 years. If I divide that by 5, I should come out with a figure to the value of 14,000 euros. 14,000 euros is the value that it is losing. It is losing value, okay? Which means it is reducing my asset. And the 14,000 is going to need a double entry. Where does it go? It's simply going to be written off. If it's being written off, it's on the debit side because it is an expense. Okay, so the 14,000 euros has been written off, and that leaves me with a value of 56,000 euros in my patents. So my patents in this case is my fixed asset, my intangible fixed asset, sorry, not my fixed asset, ITFA, and it's for 56,000 euros, and my patent written off is 14, that's my administration expense, AE 14,000. Okay, and that's that working completely done. 1 transaction, 2 entries. 1 transaction, 2 entries. 1 transaction, 2 entries. 6 double entries, all done and dusted, and we're ready to move on to working 5. Working 5 states, and this is the last working for this part, provision is to be made for investment income due. I can put a big tick beside that because that has been done in working 4. I've literally found how much investment income I was owed, so I just have to do the mortgage interest due. Now, because we're off the bat of my mortgage, I'm going to take the figures off the top of my head, which I know to be 180,000 euros is the value of my mortgage. I'm going to multiply it by the rate of percent, which in this case is going to be 6%. And that gives me 10,800 euros. So multiply by 6%, and that gives me 10,800. Okay? That 10,800 euros, that's the figure that needs a double entry. So that's going to be my expense for the year, 10,800 euros. And it's also going to be how much I owe, which is 10,800 euros. So you can see very similar to where I call the investment gain and asset, because I'm receiving it and I'm owed it. This is the opposite. It's an expense and I owe it. Okay, so it's an expense and I have to pay it. Now, if you remember correctly, back to working 3, which we can see here, when I calculated the correct mortgage interest figure, it was 2,700 euros. Now, we did not put that into the columns. So, and if you look at what side it was on, I've got 27 on the debit side. It's on the debit side because if I've already paid it, well, then I no longer owe it. So 27 is going to go on the debit side of that account, which means my expense is going to be the full amount of 2,800 euros. That goes minus end of the profit and loss, 10,800. And then my liability due, which is just the difference between 10,800 and 27. So 10,800 minus 27. If that's what you want to do, that leave you with 8,100. That's my current liability, and that will go to the balance sheet, 8,100 euros. That's part 1. And I've got 2 more parts to this as well.